What's going on, guys? It's Justin Fernio from Push and Profit. Hope everyone is having a beautiful day today. Now, in this video, I kind of wanted to just give a little trading recap of what I did so far today. Also, just talk about my experience day trading while working a full-time job, and kind of just give you guys, just some tips and things that I kind of use to, manage both working and day trading. Now, for example, today, fortunately for my job, we're doing something where one week half the people don't work and the other week the other half of the people work. However, everyone gets paid for both weeks. So, I've been very fortunate for, having a job that, is allowing that. However, most of the time I do day trade on my lunch breaks because, I day trade during the market time, which is so happen to be the same time when I have to go at my job. I don't have a night shift. If you guys have been following this channel, I currently work at the bank, so pretty much the bank hours are the stock market hours. So really the only time I do have to day trade is during my lunch breaks, like I said. So I'll have typically like 30 minutes to day trade. And the reason why at the moment, I prefer to day trade and still work is because I still don't feel comfortable in a position where I could just, live off day trading. Right now, I'm waiting until like a certain time period where I get more comfortable and more consistent with my profits, where, eventually I'll leave my job. But, for the most part, most people who start off day trading, they're not going to quit their job to day trade. You're going to still need some source of income coming in, whether that's your job, your business, whatever it is that you do, and then day trade on the side. So a lot of times I have a limited amount of time to day trade, like I said. But fortunately today I did have the whole day. However, I only day traded for 5 minutes because in reality you don't need a lot of time. Now I could go back and day trade more, but it's just you really don't need to have a whole day to day trade. It really just takes a couple of moments to analyze what's going on. Now also I do want to talk about what I've been doing recently. Recently I have been trading with a smaller account under 25,000. So I have been on the PDT rule, which means I could only make 3 day trades in a 5 day rolling period per week, right? So basically, once I make 3 day trades in the week, that's it. I can't make any more day trades, and that's because again I'm under the PDT rule, which means if you don't have 25,000 in your account, you can't make more than 3 day trades per 5 day rolling period. Now, if you guys have been following the channel, again, there have been times where I've been trading over the 25K threshold. There's been times where I traded with a margin account, trading with like 80K, things like that, right? Now, again, in this in this video today, I really only day traded with about $10,000. So again, under the PDT rule, and it was in a span of 5 minutes. So if you're looking at the screen, I'm looking at the SPXS ticker symbol, which is the bear 3 times ETF for the S&P 500. So basically, whatever the S&P 500 does, this mimics it by 3 times. And this is the bear ETF. So basically, if the S&P 500 is going down, then the bear ETF is going to go up, and if the S&P 500 is going up, then the bear ETF is going to go down. So it's vice versa, as you can see, right? Now, what led me to this trade today? Basically, I took a look at the S&P 500. If you guys haven't been following my videos, I have been talking about how we have officially been in a bear market. Now, a bear market is usually when you're, or not usually, is when the stock market goes below 30%, right? Now, you could see that the stock market has just been having a crazy sell-off, and then nowadays it's been kind of going up and down, up and down. And that's just because, when you're in a bear market, things don't go straight down exactly, right? A lot of people think that when you're in a bear market, all you got to do is short the market and that's it, and you automatically win. But in reality, when it comes to a bear market, it's a little trickier than that, right? Which is why I prefer day trading. I'm going to explain that. When it comes to a bear market, things get a little more choppier. Like I said, they don't go straight down. They go down overall in general, but they'll have days where they spike up super hard, right? We also had the days where the Federal Reserve pumped the market, where they went up, and then it just kept going down. They pumped it again, just kept going down. So that's why you see a lot of, up and down, but like hard up and downs, but still in an overall direction going down, right? So I took a look at what was going on with the S&P 500, the overall market, and again, you could see clearly that things have been going down. However, the last couple of days, the S&P 500 actually went up pretty high, and I'm talking about like 12% in a day, right? Or actually 12% in a few days, right? So with that being said, I noticed that we were kind of hitting a resistance in the S&P 500. So I kind of had this idea like, okay, well then, things are going to be going down, right? So then I went into ticker symbol SPXS, which is again the opposite. So when things go up, then, these go down. When things go down, these go up, right? And I hope I'm not confusing anyone with that. And I entered a day trading position. I'm going to kind of zoom in. And I saw that overall, the market in the beginning of the morning was going up, so SPXS was just going down, and then it hit all the way to $18.41. However, I did not get in, although the RSI is saying that it is oversold. I don't get into a position just because it's oversold or it looks like the bottom. What I always wait for is the confirmation, and what I do to make sure that it is confirmed that this is going on an uptrend is wait to see that it passes the exponential moving average, which is this blue line right here. So once I saw it kind of passing above that, it kind of gave me the indication that, okay, this is going to more likely to go back up. Now, is it guaranteed to go back up? No, which is why, we get put stop losses. This is why, we try to mitigate our risk, see what's going to happen, right? And let me kind of just show you guys what my trades were. I'm going to click show trades on the screen so you could see exactly when I got in, when I got out. And it's kind of hard to see because it's kind of blurring everything. So, but you can see that around my first trade was around, I believe, is 944 through 45. I really can't tell. And that's when I got 200 shares in at $19.10. Again, and that was right when it just had crossed the exponential moving average. So I didn't go all in. 200 shares is equivalent to about like maybe $4,000 in. Now some of you guys might ask, how come I don't just put the whole amount right when I enter, right? Why don't I just go, if I'm believing that this is the bottom, why don't I just pull the whole amount in and then wait for the top? And the reason why I try to scale in and not go all the way in and kind of just add a little bit more as we're going up is because this is like something that I do to manage the risk. For example, I put a stop loss, so if it would have hit below 1%, I would have sold, which is why if I go all in and I lose 1%, for today's, for the amount I was trading with today, 10,000, if I lost, 1% of 10,000, that's significantly more than losing 1%, which is 4,000, right? So that's why you don't go all in at once. It's always good to scale in, it's just a way to mitigate your risk. So I went in at increments of like 4,000 at a time. So I bought in. It started kind of still pulling up. I put more in. And then around over here at 9:53. So it was a little bit like around 6 minutes. You can see I made a profit of a little over 100. It was like $115. And I sold, right? Now you can see that after this, it still continued to pull up, and that's fine. I do have this rule within just our trading group that it's always good to lock in profits, right? You never lose when you lock in profits because yeah, it did go up, but it could have went down and I would have, I could have lost. So once you lock in your profits, that's it. You made your profit, right? You're not going to lose that. You already made it. And you can see, let me just kind of zoom out. It is kind of now falling down. So if I would have held all the way till now, I would be losing profits. But, like I said, I locked in profits here. Yeah, I could have waited a little more over here, made a little bit more. But as you can see, now things are kind of coming back down, which is why, when you're up, I always encourage people to lock in their profits. Now, again, the indicators that I did use was the VWAP indicator. I used, price action, the exponential moving average. I looked at the RSI, things like supports and resistances, so things like that. So that's how I was able to make, 115 in, around like 5 to 6 minutes. Now, and again, I did day trade on my day off. I could trade more, for the rest of the week. However, I think for today, I'm pretty much done. Now, if you guys have any questions, definitely leave them in the comment section below. I'll try to answer as many people as I can. Also, I do have a free Facebook trading group, which is going to be the first link in the description below. Or actually, no, it's going to be like one of the third links. You'll see. I actually don't memorize that. But just check that link out. Like I said, it's free. I'm trying to build this community of just individuals who just have like-minded ideas, whether it comes to entrepreneurship, day trading, things like that, because, you want to gain more social currency, right? Which means like be around more people that are, having, these thoughts and ideas, right? Because then you get to communicate, learn from each other and things like that. So I definitely encourage you guys to join that group. It's free. You guys don't lose anything. And yeah, so that was pretty much my recap for today. Typically, like I said, I do take day trade on my lunch breaks for 30 minutes, but today I did have a little bit more time. Again, I did day trade for only 6 minutes, but I could have used more time if I needed. And yeah, so that's really the reality of day trading while working a full-time job. You're kind of like balancing this steady income that you make, from your job, that salary, on top of just having a little bit of time to day trade. Now, again, that's pretty much it. If you guys have any questions, leave them in the comment section below. My name is Justin Fernio from Pushing Profit, and I'm out. Peace.